Good afternoon, everybody. Welcome back to the Opportunistic Trader. It is about 10:45 on Wednesday, October 24th, and we're joined by Commodity Research Group's Andy Lebow. Andy's been joining us to break down the DOE report regularly and talk about the energy market. How's it going, Andy?
It's going good, Michael. Thanks again for having me on.
Absolutely. A lot of great information, a lot of volatility out there recently. So let's start out by talking about the numbers that just came out. What did you see?
Okay, I thought the crude number was bearish on the face of it. The expectations were up 3.7. We were looking for up 4.2, and it came in up 6.2. And we've been building stock, something like 27, 28 million here over the last few weeks. Some of that is seasonal. Because of turnarounds. Refiners take their plants down in October and November, so demand for crude is soft, and stocks are building. But I have to tell you, they're building a little bit faster than what we had forecast, and that's certainly worrisome. Cushing, not surprisingly, built as well, and is probably going to continue to build here over the next few weeks as a new pipeline from West Texas gets underway into Cushing. But overall, Cushing still remains well below historical levels. Gasoline, Michael, finally had a bullish number for gasoline after weeks of just like misery on these numbers. Finally saw a big draw in gasoline. We were looking for a slight build, so we were way off on that. And the good news for gasoline is Pad 1, which is in New York, is built. Finally drew. That's some building willy nilly. It's in big surplus, and it finally drew, and we're seeing some of these gasoline spreads narrow in. Finally, distillates. The bullish. That's been bullish right along. Nice draw within pretty much down 2.2 within market expectations of down 2.3, but bottom line on distillate is we're still on the low end of supplies, days supply, which is stocks divided by demand. They're only 32 days versus average this time of 36. So distillate looks bullish, not only here but globally. That's the real bright light on the energy complex.
Interesting. So initial price action on the crude number was we traded from about exactly where we are right now, 66.83 up to 67.27, then right back to where we are right now. I see that RBOB is up small now on the day. When I say small, I mean 0.25%, so very small. What are your thoughts based on where we are right now? Just general, crude 66.85. Is there anything that sticks out in crude, RBOB? Based on we've seen a lot of volatility the past few days.
Yeah, RBOB, we've definitely have seen a lot of volatility. The problem with RBOB is, we had this one bullish report, and we're going to need a few more to get gasoline somewhat more in balance. It's certainly gotten hammered here the last couple of weeks, so rightfully so. As I was saying, that diesel is globally is tight. Gasoline globally is really long. I mean, Asian gasoline cracks stink. European gasoline cracks also aren't that good. And you look at U.S. like East Coast versus Brent, they were negative the other day. So there's still a long way to go on gasoline to even get to neutral. That still may be a sell the rally type market, but it's all going to depend on where WTI and where Brent go.
What do you get? What's the volatility? What's been the cause of the recent volatility in the energy market specific? Is there one, or would you say it's really related to just broader global, equity market?
Oh, there definitely is one. The certainly to a certain, certainly the broader equity market is is part and parcel of this sell-off. And what has the equity market been selling off on? Well, concern about demand, higher interest rates. Those are certainly going to affect the demand for petroleum. But I think the big change is you now have OPEC on an unrestrained, OPEC and non-OPEC on an unrestrained path towards higher production. And, I think if you look out a couple of months, we're going to see some big numbers coming out from OPEC producers besides Saudi Arabia. We're going to see some increases from the UAE, from Kuwait, from Iraq. Libya today said that they were producing at 1.3 million barrels a day versus a couple of months ago they were at 700,000. I don't know how true that is. So we're certainly going to be seeing more supply out of OPEC, out of non-OPEC, and out of the U.S., which is non-OPEC. Will it fully make up the loss for Iran? Not completely, but it's going to, Michael. It's going to get close. It's going to get close, actually, and I think that's the big change in the in the overall fundamental here is where there's no restraint now on any OPEC producer, and they're going to go a long way towards making up for Iran and for Venezuela, and you throw in a potential loss of demand because of slowing growth, as well as seasonal loss of demand in the first quarter because gasoline demand is soft in the first quarter. We're going to be looking from a draw in the fourth quarter. We're going to be looking ahead towards late in the first and second quarter, pretty big builds because of these higher production.
Yeah. And, we were talking before. I asked you about, what do you think about price? And you kind of thought it would be in a range. But what are your thoughts, I guess, into year end, which is seasonally pretty a volatile time, Q4? What are your thoughts
Yeah.
for where, the range sort of that you think that we'll be trading? And what do you think are the big X factors?
Well, I think that I think we're going to define the lower end right here on in this move. I don't think I think you'd have to be pretty bold to say yesterday's low of 65.74 was the low coming up. It might be a little bit lower. Maybe there's maybe 62 to 63, and on the upside back to 68, 70, something like that. The X factors, we're still dealing with Iran. We don't know what those numbers are going to be. Whether they're going to be, I was working with 1.213, a rate of loss of exports. Now I'm working with 1.617. We'll see after November what that's going to be. Certainly the macro is going to be key, and we'll see how much the Saudis pump out. For all the hand wringing about
Well, that's the question. I was thinking, that's an X factor. What ends up happening with this, and what will that do to what they do in terms of
right.
exports?
Well, for all the hand wringing over the murder of Khashoggi, in a way that could prove out to be much more bearish than bullish, because I can't see Saudi right now trying to reduce production. They're already being labeled as a bad actor. I don't think it would go down well. Either with their customers or with the rest of the world if they suddenly started to cut production. Even if we throw some type of meaningless sanctions on them, I think they're on the upward path, which ultimately could prove to be pretty bearish, particularly in the first quarter when we don't need it. We totally don't need it now. They have a big field, the Karais field, that's going to be coming up in November, December. So there's another 300,000. One thing that did happen with Saudi, Michael, is that they were negotiating with Kuwait to reopen the neutral zone, which is a production area that they share. It's 500,000 barrels a day. That fell apart, so at least we know that's not coming on. But obviously, we'll be watching Saudi pretty carefully. But
And just in general, just back to this figure real quick. You thought this was a bit of a supportive figure, right?
the numbers,
Yeah, the numbers that came out.
no, I thought crude was bearish. Gasoline, yeah. I mean, gasoline, we finally, you know, finally, it's been week after week of going, oh my God,
I
gasoline's in
just note
such
because it's
horrible
interesting price
surplus.
action. It's interesting price action after yesterday's volatility and the recent sell-off. Very quiet, very muted. Typically, DOE is a bit of a volatile figure,
Right.
and we saw that initial spike of about 40 cents higher, but 15-cent range after that. So,
Well,
yesterday's range was a few dollars. So keep an eye on it. The day is
the,
young.
the other thing, Michael, if you go into the weeds of these numbers, there was a big adjustment number of 600,000 barrels a day upwards. So, that's like 4 million. And also the SPR we're selling out of the SPR right now to pay for
Gotcha.
this tax cut, planned. But, that's another factor. So, it may not have been as bearish as on first blush. It's still not.
Yeah. All
Well,
right. Well, thank you very much, Andy Lebow, Commodity Research Group. I appreciate the thoughts on the inventories and price action, and what catalysts we're looking for. Thanks for the info, and we'll talk to you soon.
okay, Michael.